Good afternoon, and thank you for joining us today. We are delighted to have Peter Ma, the CEO of Spanish Mountain Gold. He's there with Julian Manco, their Director of Exploration. I think online we have Mark Russ, the CFO. He's in the home office, back in the home office. Peter is going to walk us through, literally, the Spanish Mountain project and then walk us through some slides. Before we begin, I just advise everyone to pay attention to the forward-looking statements. It's in the presentation in their slide deck. You can reference that, or we can send it to you. Anyway, we'll hand it over to Peter. He's going to walk us through the core shed. Peter.
Good day, everybody. I'm Peter. This is Julian. We're live here from Spanish Mountain Gold's core shack, and we thought we'd kick it off here with a little bit of a quick tour. We had some fresh core come in every night last night. And Julian, tell us what we're looking at here in the core.
So right now we have core from Sleeper Zone. That's one of our targets that we're currently drilling. And this is the material, how, if you can see from there, that's how it looked like, the Sleeper Zone. We're going to discuss a little bit later. So we hit the target and we keep drilling. We're going to show you a little bit in this direction.
What's important about the Slipper Zone for the viewers, Julian? Why are we drilling it?
The Slipper Zone is near surface target, so it's a low strip ratio zone, and which is open to the northwest. So it's an open target near surface.
Excellent. What are you going to show us next?
Well, so we have some of the geologists like measuring some of the structures. That's what we do on a daily basis. That's what in this program especially, we use an orientation core to define our main corridors and structural trends. At this point, it's very interesting that even a deeper zone, and we can point in this direction, in this zone, we're still finding a lot of the material that we thought it was only in the upper zone. So not only the Slipper Zone has that upper, like near to surface potential, but also at depth.
Excellent. So you're finding that there's mineralization to the northwest that we didn't know was there, and then there's deeper mineralization underneath it.
Correct. Another level of argillite, which looks very interesting, cataclastic texture that we think is controlling the mineralization.
Excellent. So this is the Slipper Zone. What other core you got here? What target?
So we have another rig that's drilling. It's called Phoenix. Let's move over there. So you can see all the team working here. This is another very interesting zone, is the Phoenix target. This target is, say, 100 meters below surface, and is very known because of the veins density that we have over there and a lot of alteration.
When was the Phoenix Zone discovered?
So it was 2011, and since then, I think there's a lot of knowledge that we still have to do from that deposit, from that part of the deposit.
It's sat idle since then, and you've relogged 175,000 meters of core over the last couple of years, reinterpreted the geology, new Leapfrog 3D model. What's different about this mineralization, or what's similar or different to what you showed us in the Slipper Zone in the main deposit?
That's very exciting. We always thought we have a fine grain pyrite controlling the gold grades, but Phoenix is showing a lot of high grade concentration along veins, coarse vein with galena, with base metal association. And this is, let's say, a game changer, and we can think in terms of the deposit scale.
So the type of host rock, is it a argillite or a tuff here?
That's very interesting, because initially it's completely in a unit that we think is a volcanic. It's a volcanic rock. But now that we're drilling deeper, even deeper, we're finding more argillite. So argillite unit, which is our preferred ore hosting unit or mineralizing unit, is also under the Phoenix target.
Awesome. Okay, well, let's make our way back to the office and we'll start our presentation. Thank you, folks. Stay safe. Here, 125,000 meters of drilling looks like behind us there, and it extends behind the core shack. So Very advanced project in terms of drilling. Here's actually, I don't know if you can see that. Yeah, right there. That's where we ship our assay samples. It's trees we've cut down for the project. Instead of going to waste, we've reused them and build our own sample shipping crates and support the local economy and milling and circular economy. And we build those at half the price of what a project normally pays for those on the open market. Okay, here we are. So hope you enjoyed that. Something different. And you can see we have a great team and a great crew. And we're using some of the latest technologies to orient our car and really maximize our learnings from our work. Okay, so so let's get started with the presentation. We're a single asset company with a large multi-million ounce gold exploration project that's rapidly transitioning from an explorer to a developer. Who's the next big gold mine to reignite the Caribou Gold Rush in British Columbia, Canada here? We think we are, and over the next 30 minutes, I'll explain why. Next slide, please. Forward-looking statement. Ron's already mentioned that. I've got to navigate this here. Hold on. Yeah. Okay. Yes. So location. Our project is located in a favorable Tier 1 jurisdiction, approximately 70 kilometers northeast of Williams Lake, British Columbia, Canada. We have year-round paved road access to within 6 kilometers of the project site. The rest of the site is accessed with established gravel roads, so we can drill year-round and keep our costs low. The company has built long-standing relationships with the surrounding First Nations and communities, and all are supportive of the projects and benefits. And in fact, many of the people you see working here now and the contractors, they're all local and or First Nation contractors, so BC based, and we're proud of what the team's accomplishing here now. Nearby infrastructure is excellent with several operating mines in the region. You got Mount Poly, Gibraltar, Cisco Development to the north, under development, and further to the north and west, Artemis, which you'd be familiar with. The company has entered stage 2 of the system impact study with BC Hydro for a new power supply to the project. And you can see on our table at the top, we have over 4 million ounces of gold resource, one of the largest in the corridor, and we're reigniting the Caribou Gold Rush with our new vision and diamond drilling. Why invest? Besides being highly leveraged to gold and gold upwards of well above $3,050 today, all-time highs, there are 3 main reasons why invest. First, we are anticipating a re-rate after the results of the new mineral resource estimate and preliminary economic analysis are released in H1. Second, there are strong indications of high-grade gold in the mineral endowment over a 10-kilometer strike length, which bodes well for future discovery and potential value add. And third, with clean hydroelectric power, Spanish Mountain Gold represents a unique green gold investment opportunity, well positioned for a build decision by 2027. Among the many gold investment choices available to you, we are a noteworthy consideration, in our opinion, for your asset allocation strategy to fend off a weakening US dollar, inflation, global trade uncertainties, and geopolitical uncertainty, all driving the gold price right now, we all know. We have a new board and management team, all with the skills and experience to bring this project to a build decision by 2027. Our capital structure includes aligned management and key investors making up approximately 35% of our shareholders. We are cashed up to execute our 2025 plan, and there are approximately 70 million warrants outstanding with the potential they will exercise to finance our next stage of project development. This is an interesting graph. We've been marketing, for couple years now, this slide suggests an exciting breakout potential for Spanish Mountain Gold to delatch from the explorer to the developer share price performance trend. With gold price at record highs, 3,000 per ounce, we think the timing to advance our project is ideal. Another way to look at it here is the market cap. So the bars on the graph are the market cap divided by the measured and indicated gold resource ounces. Here you can see most advanced developers on the left of the graph, and on the right are a mix of explorers and developers. Spanish Mountain Gold is valued at $13 an ounce, M&I, while the average excluding Spanish Mountain Gold is $141 an ounce. So you can see quite a drastic undervalue rating of our ounces compared to market, suggesting greater than a 5x re-rate, as high as 10x. The gray line there, that's the journey we're on right now, and we want to communicate with shareholders through our new vision and plan of how we get to the status of great success stories like Artemis and Skeena and Osisko development. There are four main catalysts for 2025. They're in gold here. So first is a 10,000 meter drill program. You're seeing the actual core coming out live today. We started on February 10th. We're about 50% of the way through and waiting on assays. Second catalyst, we have a new minerals resource coming out, H1. Third is a new preliminary economic analysis, also in H1. And then fourth, at the end of all that, early H2, we'll make a decision on how to advance the project, whether to go to a pre-feasibility or jump and accelerate right to a feasibility study. This chart shows several robust NPV bars and internal rates of return through the gold price range for a 20,000 ton per day ore processing plant that was proposed in the 2021 pre-feasibility. You can see the cash flows are robust, indicate strong cash flows and offering long-term protection over the gold price range. The new PA aims to leverage improved efficiencies, larger equipment, larger scale, and optimizing the project. Here are some highlights of the 2021 pre-feasibility. We engaged Whittle Consulting to do an NPV optimization that also targets lowering carbon intensity. The optimization is substantially complete and is being incorporated into the new preliminary economic analysis. We expect to target improved scale and a staged production profile, starting smaller and then expanding bigger as we learn more about the deposit. This is just simply sort of a before and after. So before being the pre-feas and what the vision was, and then on the right-hand side is our newly envisioned PEA targets. Overall, we expect to increase our gold production and de-risk the project, leading to an executable and permittable business case. Switching gears, I'll pass the torch over to Julian, and he can provide an exploration program update.
So this is a plan view of our current exploration drill program. The targets are displayed in color code circles, all the proximal to the 2021 resource pit. The green circles represent the near surface targets that we were showing in the core shack. Those are low strip ratios. And red circles represent the deeper high-grade targets, either for open pit extensions, but also with underground potential. Finally, in black, there are targets for growth. They're further away from the resource pit, but they also are very important to drill because they're going to help us to inform the infrastructure footprint for the new proposed mine plan. All of this to avoid any potential sterilization of the mineral endowment. Right now, I'm going to go through different cross sections. We're going to start with AA prime, which is along the deposit. Then I'm going to move to BB prime, which is going to be across the deposit. And finally, CC prime in the lower portion of the figure is a little bit more regional to include the Phoenix target.
No. Okay. Sorry.
So we have here the long section, AA prime, showing the near surface slipper target and the third argillite zone that was discovered in last year, the drilling campaign. The slipper target is hosting the upper argillite unit, which is open to the northwest, and it is situated within and near the mine pit. Similarly, the lower third argillite unit is a high-grade mineralization, and as you can see, has the potential to connect all the way up to another target that we call near pit bottom target. This is a cross-section of the deposit to display the K-zone. The K-zone, displayed here in purple, is also a near surface target, a lack of drilling, and has the potential to reduce the strip ratio, similar to the slipper zone. This target we think is located along the fold number 1, which is a strongly mineralized control structure. We're going to move to this target very soon. Finally, in that CC prime section along Phoenix, this is Phoenix. It's a large target. The currently dimensions are 1.5 kilometers long by 350 meters wide and 100 meters thick. Historical drilling ended the mineralization, and we don't really know how deep or thick is the mineralization. It was discovered in 2011, and it was a preferred tailing location at that time. And there is still a good location for tailings. Even if we outline a pit here or there in the future, we can fill it with tailings or waste. High-grade gold were intercepted, but the mineral controlling structures, as we indicated in the Korchak visit, remain unknown. There are indications of multiple highly altered, veined, hosted volcanic rocks that are being tested in the currently drilling program. So before we move to that one, I just want to close that. We still have a lot of key geological questions. For instance, what is the real depth of the mineralized system? Because we keep drilling it, we can find it. Is there a unique or multiple structures that fed the system as a feeder structure? And could those high grades have the continuity to support an underground mining operation, those that we encounter in 2024? Those are amazing questions that we will address, and that will drive the exploration goals in the project in the near future. It might have a big impact for the project value. Okay, I pass to Peter again.
Thank you, Julian. And just in closing, so we're kind of have a duality of Lassonde curves happening. And so the discovery curve's not over, and we're come in the trough and we're climbing the developer to a producer curve and layering that on. So it's very important our vision and strategy allow for both to happen without sterilizing. So new vision, new strategy, new plan, near-term catalysts. We think we're strongly positioned the company for a re-rate during a most favorable gold market. Thank you. We appreciate your time and for considering this opportunity as we reignite the Caribou Gold Rush.
We got some real good feedback, though, about your Korchak tour, Peter. The viewers on the call really enjoyed seeing it live and in color and seeing that you're working. You know, the main question that came up here in terms of our viewers was, Julian, you mentioned high grades. What do you define as high grade in the system?
Sure. We can think on things surpassing the 5 times the medium grade in the deposit. So last year we have almost 30 meters. It was 29.5 meters, about 2.5 grams per ton. So about that, we encounter areas with 4, 10 individual samples, but that's an average that we like. Anything about 2 grams per ton, we consider high grades for our deposit.
No, I understand, and I appreciate the color on that. I think that'll help our listeners understand. One of the other rather imponderable questions for you, Peter, is, you're in a great location. You've got a large system and it's open. Why is the stock so cheap?
A good question. Maybe it's the grade. I think 5x times the global grade is good, but we have as high as 200 gram per ton. So I'll just add that in there, and we're still trying to crack the code on that. But yeah, why is the stock so low? I think, you've seen this stock price from 2021 really. The moment the pre-fees came out, it's slid from a roughly 250 million market cap to where it is today. We backed this project up 2 years ago, relogged 175,000 meters of core to try and figure out what was driving that. It's not the geology, although we have a much more refined model. The model is holding well together, and we're well advanced on our targets. We've completed third-party review. I would say some of the key drivers that were reducing sort of the market's understanding of how high of a quality asset this is our lack of marketing and coming out with exactly what are you looking at and what are you buying. And I think this is a really analogous project to Artemis, and sort of before Artemis and Greenstone came along, looking at these kind of grades in Canada as a global grade where, perception was it's too low grade, you can't make money. But I think the reality of what we're understanding about this deposit, there's low strip ratios, there's good recovery. These are strong cash flow operators if you get the right scale. And so the PEAs had been done historically between 10 and 40,000 tons per day, and 20 was chosen in the pre-fees, which was too small. So we're increasing the scale to improve efficiencies and cash flow. I'd say the second concern that I believe was out there, and we've engaged a lot of new and old investors over the last 2 years, was the permitting and how the tailings were going to be handled and discharged. There was the original plan in the pre-feasibility 2021 was to put the tailings in the valley and discharge the water near the provincial park, the Cedar Point Provincial Park. We, the new board management, thought that was too high risk. I think the market factored that in, and was it a fatal flaw? I don't know, but on the back of Mount Polley's tailings dam failure and inrush into Quesnel, the social license and permitting perceptions around that were ultra high. So we've re-envisioned the tailings location and the approach with coarse ore flotation. We have a coarser product. We can now free dispose of or place tails in free draining and dry stack, which will be a superior location, and minimizing water and changing the location to sort of a more palatable location.
I think you're right. And I'll just add to that, 15 years ago, 1 gram per ton was considered a threshold to develop an opportunity, and gold price was less than half what it is today. Large, low-grade projects can work in the price environment that we're in. And one of the things that you touched on, which I think is really quite critical to looking at a large, low-grade deposit, is, as a general rule, the continuity of mineralization is far greater than the higher grade vein style deposits that you get. So when you are into a mineralized zone, you have a large, wide zone of mineralization that is continuous. There isn't so much grade risk. It's a matter of bulk mining the zone. And the second thing that large low-grade deposits generally favor them is the metallurgy is relatively straightforward. It doesn't vary a lot from place to place. Recoveries are really quite good. So I'm not certain that the investor world has picked up on how the world has changed in terms of opportunity for development.
Yeah, I think you hit the nail on the head on some of those key technical drivers. A big part of the relog and remodeling, there were 4 ore lithologies before. We have 9 now. So we have tighter controls. And we actually did a SMU, selective mining unit analysis. So right fitting the equipment size to the resource blocks and controlling dilution. So you want productivity and you want to control dilution, which those sort of kind of go in opposite directions. But we've done a sensitivity around that. The 240-ton class trucks are ideal for this deposit to balance that, and have shown in our financial modeling to be superior to the smaller gear that was proposed in 2021. Metallurgy wise, again, this deposit pulls really well on the roughers, over 95% on roughers. And with the more refined categories, there are also metallurgical categories. We've found that there are areas of the deposit that are much better recovery than other areas. So there's opportunity there to improve on recoveries. And again, those things translate into efficient operations and why low grade can really be a strong cash flowing asset.
One of the other questions that's come in is, how much cash do you actually have at the moment?
Well, we haven't come out with our year end. We're right in the middle of the audit, but we raised 8.3 million and closed last November 15th. 4.7 million of that was traditional and charity, going directly to the drill bit and that growth side. So we're cashed up for this year to complete all of our plans that I shared with you on the catalysts and plan stage there. What's not finances, if we go to a pre-FS or FS, that would be a different financing required. As I mentioned, the warrants, if they exercise, they would finance that next stage.
And I think you mentioned a little earlier that you're executing a 10,000 meter drill program at the moment with 2 drills, correct?
Correct. Yeah, we're 50% of the way through. So another couple months, Julian, max. Yep.
And the MRE update will be by mid-year. Is that about right? Yeah,
the MRE it's a combined technical report with the PEA. So that'll come out here in H1 at the same time.
Oh, very good. I think that's basically it. We really appreciate everyone's attention, all of the questions that have come in. Peter, Julian, thank you so much for doing this, for touring us. Maybe we should all come to site.
Right on.
That's right.
Spanish Mountain Core Shack out. Have a great day, everybody.
More than
Thank
welcome.
you.